Good morning. Hope everyone having is a great December. Uh, Last week I had the strep throat and a little bit sick, but here we are. I think this will be a great topic. This is an important topic for a lot of parents and grandparents. Um, transferring wealth, how Kai-Zen achieves prosperity. I think you'll find this interesting and helpful. A little bit of summary. We actually specialize in Kai-Zen, which is an innovative investment strategy that amplifies your funds by up to threefold for building a cash accumulating life insurance policy through strategic leverage. That's a mouthful. We always do some summary slides at the beginning of my presentation. So these are the summary slides. Our services, products, and uses. Notice 6 of those 7 little boxes have Kai-Zen in them. The top 3, blue, are kind of personal uses: retirement income, transferring wealth, which is our topic today, a fixed income alternative, and going to the bottom, the green ones are business use. So we have an employee benefit use, a key person use, a buy-sell succession plan use, and the gray box doesn't have Kai-Zen, traditional premium finance. Won't talk a lot about that today because we really specialize in this Kai-Zen. You can see that it'll cover 6 different areas of your life. The toll booth of Kai-Zen. You need to always know what do you have to do to get into it? What are the requirements? I think there's 5. First is financial capacity. Do you possess the financial resources to make 5 annual payments? Asterisk. We'll cover that in a jiffy, with minimums ranging from $20,000 to $40,000 a year based on various requirements. And the asterisk, which is brand new, notice November 13th, Allianz has introduced a monthly plan, which is pretty revolutionary. The second qualifications is growth period, anticipated commitment to a 15-year investment horizon before initiating withdrawals. This is not a short-term investment. If you can't commit to the 15 years, you probably should not purchase it. Financial eligibility required $100,000 minimum income with potential net worth requirements depending on the insurance company we use. The fourth require underwriting classifications, standard or higher. You can't be rated. You have to qualify for life insurance. And 5, age range between 18 to 65. That 65 is the one that sometimes gets some of my clients, including myself. They will not sell the product to you if you're over 65. These are the key 5 aspects of Kai-Zen that I always like to review. 1, Kai-Zen is leveraged maximum funding up to 3 to 1. We're going to get a bank to up to 3 to 1 put money in for you without collateral, with no personal guarantees, no loan documents, no interest payments or credit checks. This substantially reduces the capital risk, gives you a higher return. 2, performance. Market-like returns with no downside. You'll see some slides on this in today's presentation. Eliminates market risk. 3, taxes. Tax-deferred growth, tax-free withdrawals. Eliminates tax risk. 4, 5 annual payments, and now, I guess I should put in parentheses, of monthly payments, reduces payment fatigue. And 5, you get death benefits and living benefits day 1. Terminal, chronic, critical illness, critical injury. This is your disability policy. Also, this is your long-term care policy. I've sometimes referred to this as the Swiss Army knife of the investment world. So let's get into the topic, transferring wealth, how Kai-Zen achieves prosperity. The greatest wealth transfer has begun. An estimated 84 trillion is going to go to boomers, to Generation X by 2024. Came from there's a resource in 2022. And for you who wonder, what am I? Baby boomers born from 46 to 1964, there's 71.6 million of them, of course, reducing. Generation X is from 65 to 80, millennials, 81 to 98, Generation Z, 97 to 2012, and Generation Alpha, 2012 on. But the point is, there's 84 trillion held by baby boomers that some way is going to be going to Generation X. How are you going to do it? This Generation X happens to be the first generation worse off than their parents. Bloomberg reported that a few years ago. So congratulations on your bachelor's degree. You have 40% less wealth than the last generation after getting your bachelor's degree. Is there opportunities? I hope there is. I've got grandkids graduating from college and they're starting their trek in life. Here's an interesting thought. Wow, 38% of young home buyers get money from family. They get that down payment, 38% from their parents. They didn't have it. Should you begin transferring assets while you still have some influence? Here's an article from Bloomberg. Parents shouldn't wait to pass on their wealth. For parents who indeed plan on leaving behind a financial legacy, it can be far more effective to gift early instead of waiting for the triggering event of your death to transfer wealth. Transferring assets while maintaining influence. How do we do it? There's some rules we have to follow. There's a gift tax rule. And let's see, where's my notes? I don't have them. I'll have to just move from memory. I believe it's 18,000 that we can gift per person to another person without filing a gift tax form. So my wife and I can do 18,000 each. So we can give 36,000 to a given child. We can give 36,000 to the spouse of the given child. We can give 36,000 to a grandchild. This is without filing a gift tax form. Even if you file the gift, you have to file a gift tax form. There's probably no gift tax involved. It just takes away from your unified credit. We could go into that, and we have done in other webinars, but we'll leave it at that for this time. At this point, I want to go to a video. We've shown this in before. It's a good one. So let me go to my different screen. I'm going to my website, and on my website, I have a number of videos. This is the top 6, but these are all about Kai-Zen, the next best thing, Kai-Zen for physicians, in the bottom left corner. an alternative fixed income. The bottom middle is about recruiting and retaining. Left on the right is high interest rates. But the one we're going to do today is the great wealth transfer in the upper right. So let me go to that. Get my cursor moving. Where is it?
After meeting with your financial advisor, you're happy to learn that all your hard work and sacrifice have put you in a place of wealth, allowing you to live the retirement of your dreams with those you love the most. The only thing left to think about is, what will I pass down to my children or grandchildren? Wealth transfers done through annual gift tax exemptions or lifetime gifting exclusions often raise a question. What will our kids do with all our hard-earned money? Much like winning the lottery, access to inheritance all at once can be spent in the blink of an eye. In the US, 80% of people have trouble keeping their spending within their budget's parameters. Would you rather give your kids $250,000 in cash now, or give them the potential for 5 to 10 times that in their retirement? Introducing the greatest wealth transfer, brought to you by Kai-Zen. Kai-Zen is a way to provide annual gifts to your children to fund a uniquely designed life insurance policy. Why life insurance? Because life insurance can provide your loved ones with death benefit protection that passes tax-free to their beneficiaries. Life insurance also provides the potential to earn interest. Any potential gains are locked in annually and compounding tax-deferred. Because your money is not directly invested in the market, it cannot suffer losses due to market declines, making it one of the safest products to combine with leverage. Why use leverage? Because Kai-Zen can enhance your policy benefits and potential distributions by an average of 60 to 100%, which can be taken tax-free when using policy loans. Using leverage means you don't have to fund for years like most policies. With Kai-Zen, there are only 5 annual contributions, of which a small portion is used to fund death benefit and living benefits. The remainder of your contributions are combined with leverage, enhancing your potential for growth. In approximately the 15th year, the loan is paid off with the policy cash value. This means your heirs won't have to wait until retirement age to access the policy. They may use it to fund a first-time home, college education for a grandchild, or help supplement their retirement. Kai-Zen uses unique life insurance for a reason: safety. Just like a butterfly, your wealth undergoes remarkable transformations. Think of your current wealth as a caterpillar stage, steadily accumulating over the years. By implementing a sophisticated strategy, you create the protective shell that fosters growth, similar to the caterpillar's transformation into its cocoon. With our strategy, your wealth isn't static. It has the potential to expand, much like the caterpillar turning into a butterfly. As you pass on this augmented wealth to your children, you create a financial legacy that shapes their future. Take comfort in knowing your gift can provide your loved ones benefits for a lifetime. Don't leave your legacy to chance. Leave it to the greatest wealth transfer by Kai-Zen.
Well, I hope you enjoyed that. I do. That's one of my favorite videos. All right, it's one of my favorite videos that we show. I love the analogy of the butterfly and the cocoon and the caterpillar. We reviewed some of those things quickly, so let me just give you a little summary on Kai-Zen and show you how this thing works. 5 annual payments, not 20, not a lifetime, just 5 annual payments, and now we got a monthly plan available. The gifts fund a uniquely designed life insurance policy, which provides the tax-free death benefits. You got that benefit to your child or grandchild immediately. So you have that protection and you have living benefits, long-term care, disability, chronic, terminal, immediate. And then, so you have this protection, but because of the leverage, whoops, I'm getting ahead of myself. Because of the leverage, you have so much more. But these slides here kind of show you how safe it is. The investments inside an index universal life market index, they have a couple strategies. One, they have investments that have a cap. And with a cap, that means you get all the participation up to a certain level. So in this example, let's say the market, the Standard & Poor's 500 did 15 and your cap was 13. Well, you'd get 13. That kind of shows you that. But also, whatever the investment you have in this index universal life, you have this floor. You can't lose money any year. And a year that this index, the market goes down, there's a negative return, you stop at zero. That's the floor. In 2008, I remember it so well, the market was down 37%. You'd have been at zero. A whole lot easier to recover your money. But instead of this cap program, and I need to put some slides together for this, they have some funds that have a participation rate that have no cap. And in these participation rate, depending on the interest rate world, you can get participation up to 225%, which is the participation rate right now. So if the index, and they're kind of a balanced index, middle of the road, let's say the index did 8%, and if it's a participation rate was 200%, then you'd be getting 16%, no cap. Well, currently these indexes are around 225% participation. So performance with no downside. Why leverage? If you can make 10% or 16 or 8 or whatever and pay 5 or 7 in your borrowing, you can make money on other people's money. That's what leverage does. And so you have the protection, but you have greater growth potential. You can have a higher performance. If you're doing this for yourself and for income, you'll have a higher retirement income. If you're doing this to give to your kids, they are going to have a higher income. This is probably helpful to visualize how this interest crediting takes place. So let's say there's $10,000 excess premium. Where does this money goes? Well, the majority goes into a fixed investment, the general account of the insurance company, $9,500. And if that general account is earning 5%, that means in a year, it's going to grow back to the $10,000. And irregardless of what happening on the other side, you've locked in, you've guaranteed that you can't lose principal. And what they do with that $500, they purchase options. So that you get that cap performance, you get that participation rate. And so you get the performance without any downside. And leverage, we're kind of talking about that. There's no credit checks. There's no loan documents. There's no personal guarantees. There's no out-of-pocket interest payments. Kind of cool. Here's how it kind of looks. So you make 5 annual payments, or under the Allianz new, it's 5 years of monthly payments, and the bank is going to put in approximately the same amount that you put in for that first 5 years. That's the blue piggies. You're the gold piggies. Then after 5 years, the bank is going to continue to make their payments they were making for the first 5 years for the next 5 years, and they're going to also make the amount you were paying for the first 5 years. We call this approximately 3-to-1 leverage with no signatures and all those things I was mentioning. Next, we set this up in a trust in your name, the insurance policy, and then we put all these we put them in a tranche. So we might have 500 different clients into this tranche, and we set up a master trust. And the master trust is doing the borrowing. You're not doing the borrowing, but and it's a cool approach that makes it all work. Here's my laundry list. How Kai-Zen achieves posterity. Enhanced benefit amplification. Kai-Zen significantly multiplies the value of the gift you're providing to your children, ensuring they receive amplified benefit of 60 to 100% more. Tax efficient benefits. Kai-Zen policy loans guarantees that the benefits remain tax-free, shielding your loved ones from potential future tax increases and complications. Comprehensive family protection, the life insurance in the event of unforeseen circumstance affecting your adult child. Kai-Zen steps in to safeguard your family, even grandchildren, offering you invaluable peace of mind. Robust control and security. Kai-Zen is thoroughly designed to prevent reckless spending or misuse of the gift by your child, providing you for unwavering control and confidence in securing your legacy. Preserving quality of life. Transferring wealth opportunity ensures the preservation of not only your wealth, but also the enduring quality of life for your adult child, guaranteeing their long-term financial well-being. This is the slide I showed early. Your child, whoever you're doing this for, still gets these 5 big benefits: the leverage, the market performance, no downside, no taxes, 5 annual payment. You had to have the 5 annual payments or monthly years, 5 years of monthly payments, and the death benefits. Pretty cool benefits here. And want to review these qualifications. Do you have the capacity to do it? Does your child have the 15 years horizon? And there's some additional financial eligibility I'm going to show on the next slide, but you still the child still has to qualify insurance-wise in between 18 and 65. The additional requirements, if you are under 55, the giver needs to have their own Kai-Zen unless they are uninsurable. The giver must have a net worth of $3 million or higher, annual income of $200,000 or higher. If you use wealth transfer, and there's someone, I probably should change this slide a bit. If you're over 55, the giver does not have to own a Kai-Zen. Oh, I need to fix this slide. Then and it needs to have an income over 200,000. I'm going to give you an example of a case I recently did in a minute. So there's those 6 uses of Kai-Zen. We've been covering that middle blue one today. And again, for parents who indeed plan on leaving behind a financial legacy, it can be far more effective to give early instead of waiting for a triggering event of your death to transfer wealth. Now, some of you know about the ILIA Interactive Learning Information Site. It's a special website that you have to have an invitation to go to, and eventually you have to have a login and a password. And once you have those, then you can move around and look at it. do some estimated benefits. And that's what I'm going to do now. I'm going to go to Ilya's site. Oh, did it pop out? Maybe it popped out. I'm going to have to probably pull it up again. Sorry. Give me a second. Okay, okay, here's the Ilya site. And on the left side, we have an index with all the features of Kai-Zen. We have this introductory video right here. There's a little different one than the one you just saw. Estimate my benefits, financial solutions, how it works. Another video that talks about the leverage, the plan details, testimonials, has a lot of information. But I want to go to estimate my benefits today. There's two approaches here. There's the quick result estimator and the custom design. We're going to show you both, but let's just start with the quick one. My youngest is a daughter. She's 38. Let's say they're doing okay in life. She had her husband and 3 boys, but let's say that I was worried about them. I don't think they have life insurance, and I want to have them covered for life insurance. I want them covered for disability. I want them covered for long-term care, and I'd love to pass on a real benefit to them, an income, a retirement plan. So I put in 38, I put in female, and then I've got this slider down here, and I can adjust this, and I'm gonna, I can't get it to go lower. Let's stay with 25. So I'm gonna calculate this. And here we have the benefits. There's those 5 annual payments, the bank's 5 annual payments, the bank's continued through the next 5 years. So my contribution, if I'm doing this for my daughter, is 125,000. The bank's putting in 309,360, a total of 434,360. Excuse me. I guess that's that strep throat I had last week. Anyway, now we're going to go to the benefits. So we have a policy initially of 916,000 death benefit immediately, and you can tap part of that for disability and long-term care. Let me talk about the rate in just a second. But this policy, starting at age 65 for my 38-year-old daughter, would give an income of 69,000 a year start at 65, tax-free. If she took those in checks for the next bunch of years until 90, she'd have pulled out $1,794,000. Remember how much I put in? 125,000. And she's got $1,794,000. You talk about giving a benefit, and there's still a death benefit of 865,000. The growth rate, the returns, way down here in the fine print, see that 6.71? That's the rate that we've used for this growth return. Is that a fair rate? I think it's real fair. What is the Standard & Poor's 500 averaged over a bunch of years. Oh, 7 to 10, sometimes averaging 9, sometimes 8. So if over a long time it over averaged 8, so projecting this at 6.71 is being conservative. Can it do better than 6.71? I'm sure it will. At least that's my opinion. Now let's go to this next one. Next comparison. This is a bar chart, but let me just do the numbers. So there's that 69,000 income starting at 65. If we did this same life insurance policy, and I use Allianz, instead of using the leverage and the Kai-Zen, we could have given her a check of 45,000 a year. What's that? 29,000 difference? Quite a bit. If we did it in an after-tax investment, no life insurance, still at that 6.71% return, but paying taxes, would add a check for $30,551 per year, a total through age 90 of $794. And if we did in an IRA, because IRAs and 401ks give us some benefit, tax deferral, would add income of $39,000. Same return across the board. Kai-Zen, if you give it the time, beats the other ones. Now, I'd like to go to the custom design. Custom design is a little more complex, and a little more information we put in. So here's where we start. We put in a name. I'm going to call this A, and the last name of A. How about that? AA. And we select a birth date. Let's see. What should we put? What if we put January 1st of 1995? And we pick a male. And so that's, we pick health. Health is excellent. So we got a 29-year-old. And does this client use tobacco or marijuana? We'll say no. Then we go to next. And do we want maximum death benefit or do we want a potential check income? Now, what you buy and what you do is two different things, and what you project. So I'll do a projection of income. And now here we come for a payment. And it says a minimum of $21,350 annual contribution. And we also have over here a monthly option. So I'm going to change the monthly. And now it says the minimum amount should be $1,780. All right, let's do $2,000 a month. Then we're going to put next. Here on this more custom design, we can decide what age we want income to start. It automatically shows 65, but what if we did 62 when they're eligible for Social Security? What if we said we want income through 100? Well, let's review the results. Now, in this custom, there's a little more number crunching, stress testing, which these plans are stress tests and evaluated thoroughly. And so it's crunching the numbers. It takes a little bit of time. I'll look to see if do we have any questions. Doesn't look like any yet, but this will be coming up soon. You'll like what we show you here. Okay, about done. Okay, notice way up at the top, see that circly thing? It's circling, putting together the illustration, but the numbers are all just down below like we set. So we did 120,000 per 5 years. Bank's putting in 284, 407 total. Next, we're going to look at the benefits. We're going to have a life insurance of $915,000. We're going to, this person who is, what do we have, 29? Going to have a check for $106,000 tax-free starting at 65. But through 90, they'll have $4 million, $134,000. And I put in $120,000 and they're getting a $4 million back. You talk about giving them something meaningfully, something for their whole life. And a death benefit is still $101,437,000. And if you want to look at the comparisons, 106 compared to 63 without the leverage, 36 in a regular investment, 47 in IRA. Again, this strategy beats the competition. Now, I want to scroll way back at the top. Notice that view illustration is now there. So now with this custom, I've got a client proposal that you can print. If you're invited to this site, you can print your own. Here's the proposal with all the details, explaining it all in a print form. This will show you the comparison compared to, there's a lot of, here's the stress tested returns. If you did this in the 80s, a higher interest rate market, you still have an income of $79,000 per year. If you did it during the Depression of the 30s, you have income of 68. Remember what the competition was? I have to do the other one. Oh well. And you have all the information you possibly need here in this illustration. Now, there's also the carrier illustration. This is really long. This is the Allianz. This is actually the official illustration that I've generated, you've generated for yourself. This Allianz approved. They put it out. Here's all the details there. And this goes into a lot of interesting information. And it talks about the indexes available. Let me see if I can find it real fast. There's a lot of, here's the indexes. Here's this Bloomberg dynamic right here, has a participation rate of 218.5%. See these participation rates? Some of them depending on, but so here the 10-year average is 11.88, 15 is 11.76 without a cap. You can get some great returns in conservative investments with no downside. Well, I've probably spouted off about that long enough. That kind of concludes our webinar today. Let me see if there's any questions I have to answer. Oh, I have one. They mentioned a child. We used a 29. They wanted a 20. I'll let them. It'll be very easy for them to do. If you'd like to have an invitation to this ILIA site, just send me an email. We'll talk. We'll get your date of birth. We'll get your email address, and we'll send you an invitation. I've enjoyed being with you today in this webinar. I hope you found it helpful, and have a great weekend.